So here is, we are recording. Here is the trade that we want to put on for a bouncing stock this week. As you can see, this is the chart of Tico Energy up here. And it has made its bounce. This is 1 up here. This is 2 down here. This is 3 up here. This is 4 down here. This is 5 up here. And now it's at number 6. If I was to draw my lines, it will look something like this. Okay? And I will probably draw it right here. And maybe something like that. And the expectation is that now that price has reached this buy zone down here, it will go up back up into this sell zone up here. So if price gets up to this area right here, we'll be looking to sell. So the market is going to close in about 10 minutes. And so we'll go ahead and place this trade right now. To do so, we go to the Thinkorswim trade platform. And one more thing before we go there. One of the things I'd like to do is see how long it's going to take from the bottom to the top. And in this case, if we look at this from this bottom to this top, it took about 7 days. If you guys can see that number hovering right there, see that right there? It goes up here, that's 6 to 7 days. From that point all the way down to this bottom took about 31 days. From this bottom all the way to this top took about 40 days. If we were to go from here to be conservative, let me delete this. If it was to go from here to be conservative all the way back to the bottom, that took about 48 days. And if I took the first time it got up into this buy zone, until the very last day was in this sell zone, that was about 35 days. So on average, or the longest time it took was 48 days. That being said, when we place our trade using options, we want to make sure that we have more than at least 48 days. So we go to this option chain, and rather than picking the November option chain, I will probably pick the February 143 days out option chain. I've looked at all the option chain, and this is beyond the scope of what we need to talk about, but we'll just go ahead and place this trade. We'll pick this one, the 1750 strike price. We buy that. Let us buy 20 contracts of this. All right, and we will put it in as the market price because we want to get in right away. Hit confirm and send. We verify that everything is there. We are spending about $1,000 for this trade. Go ahead and hit send, and that should fill that trade. All right, now we filled. Go to our next chart. The next chart is PCG. Okay, and we'll walk through this one real quickly so we can get filled before the market close. We zoom in. All right, let's draw lines real quick. Go from down here to maybe somewhere around here. All right. The top part, I will go from here to somewhere around here. Now, even though it's not in this zone particularly, because of the fact that it is showing this bullish engulfing signal, we are thinking that it's not going to come back down into this zone. It's probably going to take off. So I will redraw my lines to fill this gap right here that we see over here. Okay? So if we did that, we know that it captured this zone here, and now it's over here again. If everything works out right, it should come all the way up to $47. Let's go place the order on this. And once again, we'll be looking at least 60 days out, and we are going to pick the 45 strike price. So we'll buy this, do 20 contracts. And mind you, you can do as many contracts or as little contracts as you want. In this case, we're just doing 20 contracts. That's about $2,800. We want this to be a market order, so I'm going to change this to a market order. 20 contracts. Hit send. Oh, it says it's not accepting it. Let's try and see if we can go back and do that. Buy. We want a market order. Let's make sure that we have do 10 contracts on this. Let's see what happens. Okay. Confirm and send. There you go. Let's try it one more time, see if we can get 20 contracts filled. We'll do another 10 contracts. All right. Go back here. Confirm and send. Perfect. All right, so now we got our 20 contracts that we wanted for that. And then the last one is XEL. Going to XEL. This is what the chart looks like. We are thinking that price should come down within this zone right here. Somewhere around here. All right. And maybe come all the way back up to this zone right here. So we'll buy in this buy zone right here with the expectation that it might come back up to this sell zone up here. All right. Go to the order page, XEL, enter. All right. And in this case, I think we'll go to the March, and we will be buying the March 30 strike price. All right. We want to make that also a market order. We want to buy 20 contracts. And we hit confirm and send. And I rejected it again, so let's reduce the price for the contract numbers. Let's go ahead and buy this again. Let's do 10 contracts. Go back in. We want to make it at the market price. And send. Send. Yes, we do. Let's go back one more time. See if we can get another 10 contracts. Market. We do 10 contracts. Hit confirm and send. Hit send. And we got filled. And that's it. We placed our orders, and within the next 2 to 6 weeks, we should be closing it out for paycheck. Until then, we'll give you an update when that time comes. But remember to trade on the right side with confidence.
Also remember,